how to buy a tax deed property for under $12,000 and double your money. Welcome back. In this episode, I'll show you how to start your journey in real estate with less than $12,000 and double your money and then some. You'll be amazed at what you're about to see and hear. I'm revealing foundational information that is little known by most people, but you'll find it highly lucrative. Making money in real estate is the envy of millions of people. Thousands of books and television programs, even seminars in big city hotel ballrooms. Gurus explain how to get rich, usually with fixer-upper properties. Many of you watch those house flipping shows and dream of big profits. Today, I'll show you better and a less risky way to achieve those dreams. For example, on TV, you would see a pretty woman host an older home that needs an overhaul, and it's rapidly transformed magically. In 25 minutes, it becomes a small mansion. It's time to stop watching those shows. It doesn't happen without thousands of dollars. It's not the real world. It's a TV show. It's created for entertainment. Since 1970, I've been involved in real estate, and I've seen and learned a lot. I must admit, I learned more from my mistakes and the down real estate markets than at any other time. This is a short video, but if you'll stay with me, at the end of the video, I'll reveal some of the big mistakes investors and newcomers repeatedly make at auctions. Let's make sure you avoid those mistakes. In this video, I'll give you insights and strategies that will make you more confident, and you'll have the ability to make safe and secure money for you and your family. In this video, I'll reveal how you can jumpstart your real estate investment journey with just $12,000. We're talking about a proven method that could transform a small sum of money into a substantial income stream. Most people are unaware of these techniques, which I'm about to teach you. I'm revealing a government-mandated and administered program that is little known. However, it's lucrative, and you can get started for little money. Most real estate training has a high level of hype. I call that promotion, and a low level of content. Well, we're going to reverse all that. We're going to give you a lot of content. Today, you're going to see a small, safe investment that will grow continuously and make you high-level big dollars and give you security so that you can enjoy a six-figure income in your first year. The process doesn't take years. It takes a simple business training and understanding. The objective is not showmanship or owning a beautiful home. The objective is to purchase with enough margin to make big profits. Entrepreneurs are taught to observe best businesses and make them better. They are also taught to create new and innovative business. Let's face it, making money is old school. Folks, I recommend you learn from the pros. Observe Walmart, Target, Costco. They all have full parking lots, and many customers see them as the competitive merchant. All right, so we're going to copy them and use the same process. What they do is they buy low, they create a small markup, then they sell low compared to the Main Street merchants. They're so competitive that they wiped out Kmart. They've killed Sears. JCPenney teetering on bankruptcy. Why? Because these retailers have figured it out. So let's copy what they do. They buy it low and they sell it low. And what about those merchants? Well, quick summary, lots of them are closing down. This system works. Let's copy it. Walmart, Target, Costco figured it out for us. The banks also follow them. Chase Bank, Bank of America, Wells Fargo, they all do the same thing. They issue credit cards. What are they doing? They understand America buys installment payments. The banks, the retailers recognize installment payments. These are two great lessons. Follow in their footsteps. Buy low, sell low, and let's see what we can do about installment payments. Today's episode is all about how much do you need to invest in real estate if you buy a tax deed property. Investing will be the easy part. The lesson I've just discussed is important. Tax lien certificates and tax deed buyers are bargain hunters. They don't want to buy in the country club. The nice A and B properties cost too much money. Bargain hunters buy C and D properties. Let's call them used and abused. And then they market to people who want installment sales and also want to do fix-up. Thousands of auctions are scheduled every year. More than 5,000 tax defaulted auctions take place in the United States. So what's going on here? Well, the state legislature mandates that the local county treasurer must levy taxes. The same treasurer is authorized to collect those taxes. If the property owner is unable or refuses to pay those taxes, the treasurer will evict that owner and then confiscate the property. That'll be followed by a sale, a public auction. The starting bid at that auction will be very close to the past due delinquent taxes. The bank mortgage will be wiped out. It's going to be deleted, extinguished. That means it's removed from the records. It's the law. They do that on every property. Tax defaulted properties are auctioned and sold at public auctions. That means you can attend. Anyone can attend. Anyone that has money can bid. Starting bids are as low as 10 or 20 cents on the dollar. What does that mean? That means you're getting a discount of 60%, 70%, 80%, just like Target, just like Costco. Savvy auction buyers are usually entrepreneurs and mavericks. Let's call them investors. They love to bid at auctions. In low population counties, you'll find dozens of tax defaulted properties. At auctions in large population counties, you'll find hundreds of properties. The auctioneer will move quickly as possible. In the small population counties, the auctioneer is a county employee, and that's to your advantage. Savvy investors soon recognize they're involved in a business of great abundance, and they'll search the property auction list for the gem they want to make that big profit margin. This is a 200-year-old system that was created because property owners can be delinquent on taxes. The county and state will not tolerate late tax payments. The local government needs money. What do they need that money for? They need revenue to pay the school teachers, the police and sheriff department, the county employees. I'm sure you're getting the idea. In the United States, there are over 3,000 counties. All of the counties are authorized to levy and then collect. And if they can't collect taxes, they will confiscate the property for non-payment of taxes and sell it at a public auction. All property within the county except schools and churches are taxable. The treasurer is mandated by the state to follow the statutes which require tax collection or confiscation and a public auction. The process is swift. It's very detailed and specific. It's all authorized at the state and county government. The property owner either pays taxes or they forfeit their property and they forfeit their ownership. There's a never-ending supply of bargain properties with no mortgages. A new batch is created every year. Don't buy junk. It's important to know whom you're going to sell the property. Here's a perfect example. Clients, a couple named Sonny and Marcia, after completing my training, they purchased a property in Michigan, a less than average looking 5-bedroom, 1-bath, perfectly livable home, certainly not in the country club. The purchase price at auction was only $8,000. Together with helpers, they cleaned up the property. That cost them another $4,000 to haul off all the trash. That was also followed by placing an ugly sign on the front lawn. Folks, they sold that property for $35,000. The buyer asked for financing. The couple agreed to an installment sale with payments over 10 years. The total due to the buyer was $52,000. That's a little over $4,000 every year for more than 10 years. That's an annual rate of return on their $12,000 of 30%. A local bank heard about their contract and wanted to purchase the contract and use it themselves. Let me summarize. They bought low, they sold low, they were the banker. Total investment $12,000. They earned $23,000 on the property, and then an additional $15,000 lending the buyer the money. This episode is all about how much do you need to invest in real estate to buy a tax deed property? The answer is not very much. All right, now these are the mistakes they did not make. They followed the rules, and the rules are buy it low, sell it low. The property was valued at $45,000. They sold it for $35,000. They didn't fix the property. They cleaned it up. They made it presentable. The new buyers were willing to spend time and money to make it better, but they offered an installment sale. This made the deal very attractive. Many buyers are rejected and disappointed by the local banks. The couple was willing to become the banker. That was the answer. This could be your next investment opportunity. Click the link in the description Download your free map to see what auctions are happening in your area. This could be a fast start to your real estate profits.